We are joined by the Chief Executive Officer for Lipis Advisors in Berlin, Germany, Dr. Leo Lipis. Thank you so much for your time, Doctor. We do appreciate it. Let's maybe start off with your experience having been working with central banks and perhaps payment systems globally, and the revolution of these payment networks, what we've seen over the last couple of years.
First of all, thanks for having me here this morning, Heidi. Lovely to be here. One of the key things I think that's been driving the development of payment systems globally has, on the one hand, has been geopolitics. And this is not simply something that's begun happening this year. This has been a trend that's been happening for a long time now, for perhaps the last 10 years or so. And there are a number of key risks that have come out of that payment systems have sought to mitigate. One of which is sovereign risk, for example, of ensuring that your payment system is not beholden to another country's politics, to another country's variations in their foreign policy, or to a number of companies. And of course, then as part of that, there's also the concentration risk. You don't want to have too much of your payment system's functionality tied up with one particular company, so with cloud-based services and so on and so forth. So on the one hand, there's the political risk, and there's also the technology risk that goes along with that. That, of course, has driven payment system developers, payment system operators to take a really hard look at what it would take to mitigate those risks and how to do that much more within national borders. The impact that that's had has really been profound. And there are a number of other important trends here as well. One, I think, at a political level globally, we've seen the G20 come up with its agenda for improving cross-border payments. And that has four key elements: looking at the cost, the transparency, the speed, and the accessibility of cross-border payments. And I want to focus in particular on that last of the 4 points. While cost, efficiency, and transparency are important, cost, speed, and transparency are important, the accessibility part of this has made a really big difference in people's lives. In particular here in sub-Saharan Africa, where we've been seeing non-banks increasingly entering the payments arena. We've increasingly been seeing the development of payment systems and the openness of payment systems to outside players and the way in which they play in that. We've seen that play out globally in places as diverse as Brazil, India, China, where non-banks and the accessibility of payments to the average individual that they bring have made an enormous difference in the removal of cash from economies and the digitization of payments and in the inclusion of people in the modern economy.
Yeah.
So that, I think, has made a huge difference over the last 10 years.
And what about the fact that there are, of course, major challenges when it comes to traditional banks and card networks, obviously adapting to this ever-changing payment network that's currently happening? I mean, I don't know when last I walked into a bank.
I think you're not alone. I think when you look all around the world, right, we see bank branches closing right and left. So clearly, banks face challenges, I think, in dealing with this. Part of it, I think, is exactly what we've been describing, right, which is the way in which the digitalization of banking services, right, has made them far more accessible to many people. At the same time, when we look at what's been happening in payment systems in particular, there are a couple of different trends that we've been seeing. First of all, the reduction of cost to us as consumers means there's also a reduction in revenue for the banks, right, coming from payments. The second thing it means is that the increase in speed means that there are increasing bottlenecks on the back end of the systems, right, where the banks have to process those payments more quickly and at higher volumes. So therefore, they're stuck in the situation where they have lower revenue but higher cost. So they have to make investments without actually much hope of perhaps much hope of return in those things. The third thing it means is that faster payments often, unfortunately, leads to faster fraud, right? Which means that fraud systems have to be able to keep up with that and keep up with the processing of payments in real time. So all these things combined create huge challenges for the banks. And there's a fourth thing I haven't mentioned yet, which is the fragmentation of payment systems, right? There are many more choices available to you and me as consumers. And what that also means is the banks then are the link in the chain, or perhaps the better metaphor is the hub, right? The hub in this hub and spoke system of payments. They're the ones that create interoperability between all these different payment systems, because ultimately that money has to come in or out of a bank account, at least for many people. And so therefore the integration into all the various fragmented payment systems that people are using is becoming a real challenge for banks as well.
And you touched on the risk. I mean, we seeing on a daily how scams and the risk has increased because of what's currently happening online when it comes to transactions and payments and so forth. Could it get worse? And how do we avert the big risk here when it comes to scams because of how things are evolving within the payment network?
Yeah. So to answer your question, I'd actually like to take a step back and talk about fraud more broadly for just a moment. And
Sure.
I'll get to the particular question in just a moment. People often believe that real-time systems create fraud somehow. There's very little evidence that that's in fact the case. They definitely attract fraud. So what they do is that what it means is that for the same reason that sending a real-time payment is attractive to you and me, it's also attractive to a fraudster, right? The money moves faster, it's irrevocable, right? And therefore, if I'm able to dupe you into sending me money fraudulently, right? I actually then have the money and I can reuse it right away. I don't have to wait for it to settle. I don't have to wait, and so on. So that makes it more attractive to fraudsters as well. However, when we look at reliable studies of how much fraud there actually is in other payment types, for example, if we take cards, reliable studies globally say that card payment fraud is about 0.03% of the value of a payment on average. So that means for every 1,000 Rand that's transacted, there's about 30 cents of fraud. It's not that much, right? So there's no reason to believe that fraud in real-time systems is any more common than that. So that said, however, the real issue though is scams, right? And how is it that we can do that? And it's unfortunate that a lot of this, of course, ends up in the payment system, right? I don't believe that it's a problem that undermines the trust or security of the payment system per se. But what it does mean is that we as consumers, as small business owners, need to be much more vigilant about who we send money to and for what reason, and ensure that we're actually doing business with people that we trust or sending money to people that we trust. I think it's the underlying issue. So.
And let's perhaps in what you just mentioned, a lot of people, especially on the African continent and in South Africa, remain financially excluded. And there are a number of reasons for that. But an interesting comment was made about, it's not really about the banks, but the banking, the service that the banks provide. And how does that translate into ensuring that everyone has access financially, not just to be financially included, but to be able to engage with payment systems online and transact online? It becomes very difficult because of the dynamics on the African continent and in South Africa.
Of course, and I think it's a thorny issue. It's a thorny problem. It's one that people have been struggling to address for decades. That said, I think one of the key things about serving customer needs is you have to meet the customers where they are. And that means physically in the first place, right? You have to physically go and be in the neighborhoods in which they live. You have to physically, in some cases, talk to them face to face. There's no more powerful marketing than word of mouth marketing. But in addition to actually being where they are physically, you have to be where they are financially. And that means offering them products and services that are at a price point they can afford and that makes sense in the places that they want to use them. And in particular about payments, that means solving the chicken and egg problem. Namely of saying, it doesn't help me if I offer you a card when the shops that I go to won't accept it. It doesn't help to go and offer the card to the shops if the consumers don't have it. So I've got to solve for the what economists would call the network economy, right? So having both sides of that network, having the solutions available to them that are actually helpful. The third thing is to meet people where they are emotionally. One of the historical reasons why banks haven't been very good at serving those parts of society is that the trust isn't there. So my expectation is that over the next few years, what we're going to see is that non-banks and the fintech innovators of the world are going to be entering the market, right, and are going to be serving those customers in ways in which the banks historically haven't been able to do. And we've seen that play out, as I mentioned earlier, in a number of places. In particular, we've seen this play out in India and in Brazil. But there have been other good examples, places like Mexico, places like Ghana, places like Kenya, where non-banks have come in and played a very, very important role in providing payment services to people who historically have not had have historically not been financially included.
Perhaps in closing, if you could look into your glass ball, how do you think things are going to look in the next 5 to 10 years when it comes to the payment network system, fintechs, banks?
Well, I think that there's a significant effort underway here in South Africa to actually do that, right? The Reserve Bank has its PEM program, the Payment Ecosystem Modernization Program. So I expect that over the next 5 years, we'll see significant progress in that, and along many of the other policy goals that both the SARB and the Treasury have laid out over the last few years. So we'll see significant progress over the next few years that will allow for exactly the types of things we've been talking about. It's adoption of real-time payments in South Africa, greater financial and digital inclusion, as well as the development of new innovative services for those that are already enjoying the modern financial economy.
Great. Thanks so much. Thank you.
Pleasure.
I appreciate it.
Thanks for having me here today.